Thanks for clicking! The Toronto Regional Real Estate Board has just released its numbers for the month of September, showing a real estate market that has shifted in the favor of the buyer.
We negotiate, we demonstrate.
Indeed, as we'll see, with a major surge in new listings and a dearth of sales, the Toronto market is seeing a sales to new listing ratio not seen since the financial crisis. And as such, with demand plunging throughout September, the dynamics of the market are changing, with buyers and sellers employing new tactics to get their homes closed. So what I want to do today is go over Toronto's real estate data for September, take a look at some of the changing mechanics going on in the market, and then discuss some tips going forward. Well, the Bank of Canada warned just yesterday that we could still be a long way away from the 2% target. September's inflation data is due out on October 17th, which will obviously have a big impact on the bank's decision coming up on October 25th. We'll obviously have an update out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, if you remember, that's the price of a home, which represents the most popular set of features. The benchmark price in August was $1,141,400, and that dropped down a little over $14,000 to $1,127,000. So that's a $14,000 decrease in the price of a home, which represents the most popular set of features in Toronto. The average price, however, despite all the new listings that we'll see, was up and up substantially. The average price in August was $1,082,496, and that jumped up to $1,119,400 in September. So that's a $37,000 increase in the average price in just September, which is much more in line with prices that we saw back in July, when the average price was $1,118,000. And the median price was also up in September. The median price, that's where half as many homes sell over that price and half as many sell under that price. The median price in August was $933,250, and that shot up to $960,000 in September. So the median price is up about $27,000 in August despite all of the new listings, and is much closer to what we saw again in July, when the median price was $974,000. Next up, the sales to list price ratio, which measures by how much over or under asking a home sells. So if a home is listed for $100,000 and it sells for $95,000, the SLPR would be 95. The SLPR remained unchanged in September, staying at the 100 that we had in August. So, on average, homes are selling for their listing price. So, in sum, we have the benchmark price down about $14,000, we have the average price up about $37,000, we have the median price up $27,000, and homes are still selling for their asking price. We're not in that under asking territory just yet.
Well, give it time. See if I can't make that happen for you.
But the real story coming out of September's market in Toronto was the number of new listings hitting the market, reaching 16,258, a major increase from the previous year's 11,281. This, combined with only 4,600 sales in September, is the lowest sales to new listing ratio that we've seen since the fourth quarter of 2008, in the wake of the global financial crisis. Back then, following the fourth quarter, the TRREB noted that until the economy rebounded, consumer confidence in home sales were likely to stay low. However, back then, the cost of borrowing was half of what it is right now.
Yeah. So what?
And the increase in new listings shouldn't be a big surprise, as we heard midway through the month that there was a real surge in the number of condos coming to the Toronto market. Tom Story, realtor in Toronto, said that with so many condo investors choosing to go with variable rates, they can no longer afford to keep their properties, and are instead choosing to sell. With so many new listings coming to the Toronto market and demand just not there, which we'll get to, Toronto is now officially in a buyer's market. And as such, with market dynamics changing, so too are the behavior of buyers and sellers, with buyers now choosing to sell their home first before opting to buy another one.
That's a bad idea.
Whereas, for the past few years at least, buyers could submit an offer on a new home with 99% certainty that they would be able to sell their previous home no problem. That is no longer the case. With listings so high and sales plummeting, buyers can no longer be confident that they will be able to sell their home in time to have the down payment for the purchase of their new one, and as such, are trying to sell their homes first before they can buy their new property.
Why don't you explain this to me like I'm 5?
And this change in dynamics moving to a buyer's market is definitely important. As we've talked about so many times on this channel, if you submit an offer on a property, waive conditions, and are unable to close because you don't have the down payment lined up or don't have financing in place, you can get sued. In the courts, time after time after time and again, have consistently ruled in the favor of the seller. And, at least right now, it doesn't look as though demand is going to be returning to the market anytime soon. With fixed mortgage rates skyrocketing, especially amid surging bond yields, a lot of buyers just don't have the money. This lack of demand isn't just a matter of buyer psychology, though I'm sure that's at least part of it. This is a matter of buyers just don't have the money to purchase properties at these prices. With fixed rates surging over 6%, meaning buyers now have to qualify at 8%, 2.75% higher than they had to qualify during the peak of the pandemic, a lot of buyers just don't have the money to support these prices. While we continue to hear that Canada's lack of supply will prop up prices, will put a floor on any real estate correction, if buyers don't have the money to support current prices, if buyers can't qualify for mortgages at current prices, then prices have to come down. As such, so much of what happens to the Toronto market is going to be dependent on Canada's inflation data coming out in a few weeks and on the Bank of Canada's response to that data in late October. We will have an update out on both on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.